What is up, guys? Welcome back to the channel. So today we got a bunch of really interesting data that just came in. So let's just go right into it. Markets and Mayhem made this post today immediately when the data came out, saying that the core PCE year over year came in at 4.9%. Right? The core inflation numbers are coming in hotter than expected. The expected was 4.7, came in at 4.9. Hotter than expected inflation, meaning that the Fed is going to have to be raising interest rates even more. The Fed pivot narrative is being pushed further and further away to the point where it's not even visible. So more hiking is coming, guys. That's what we know. The consumer sentiment report came in as well, actually higher this month. So we had a 0.4 tick to the upside. Consumer sentiment is slightly higher this month, but it's still down minus 19.5% year over year. So a little bit of conflicting data. We have consumer sentiment up, inflation coming in hotter than expected. And also another interesting part about this report is that consumers, it says the median expected year ahead inflation rate declined to 4.7%. So consumers are actually expecting a decline in inflation, which means the Fed is doing a good job at keeping inflation expectations, tamed, which is very important. So there's some positivity here, actually, but inflation is coming in hotter than expected. A lot of conflicting things. So on my channel recently, we've been talking a lot about the risks, right? So much stuff we discussed: deglobalization, economic warfare, earnings recession, war and inflation, recession fears, recession, possible 10-year flat market, all kinds of stuff we were talking about. Basically, the facts, which is the global macro situation is definitely taking a massive shift here. But I want to make sure that we're not getting too tunnel vision about this, and we're not just sticking to one side or one narrative, because really at the end of the day, I don't know for sure, you don't know for sure, we don't know for sure. So we got to keep ourselves in check here. There is always an opportunity for volatility. And right now, we're seeing consumer sentiment ticking up. Consumer expectations of inflation are pretty tame, so that's positive. We're seeing, inflation coming hotter than expected, which is not so good. Pretty conflicting. Generally, the macro picture still pointed down. I think at some point, we're probably going to go lower, but that doesn't mean it's only down. That doesn't mean down only. There is a possibility for upside. Right now, the S&P is sitting at the 200-week. Very, very key moving average. And of course, as we were talking about, in most major recession periods, we're falling below it. Right? It's used as support in bull markets, and we're falling below the 200-week in recession periods, bear markets. And now we're at that sort of what I call the recession threshold, the 200-week. Of course, if we get below it, so that's very bearish and all that, whatever that means, we have a continued recession. But in the meantime, as we head into the midterm elections, it's possible that we may bounce. Just want to open your guys' mind up that it's not down only. We're at a very key support here, very key moving average coming into the midterm elections. A little bit of conflicting data. The economy generally is still doing decent, but the Fed is essentially saying that they need to put more pressure on the economy to tame inflation. So we're going to see the Fed sort of try to slow things down. That's what they're going to try to do in order to tame inflation. They need to slow down spending from consumers and stuff like that. So they're going to be the ones putting the pressure on us. But for now, maybe we see a bounce. That is totally a possibility. October, historically, guys, the seasonality, the historic seasonality. September is historically the best dip by month in general, right? September, usually October yields some returns. And that is what we see from these historic charts. Even Stephen Bolkowski mentioned here, the best month to buy is September. So from a seasonality perspective, right now is a great dip buy month if we're going based on probabilities of the usual performance. So, we usually dip September, October, and then bounce in October. That is the average performance. So keep that in mind. It could be a recession, it could be a continued recession, but there's opportunity here within the months for some volatility. And remember, the macro trend line is well above us here. And we're at the bottom trend line. So it's possible that we may have an Uptober, that we may, play into this range a little bit. Bitcoin is sitting well below the macro trend line. It can play into this range a little bit. If we're going just based on seasonality, we should be expecting some returns in October. So before we get too blindsided by one opinion, one idea, just remember there is upside potential for the month of October. But we'll see. Long term, I do expect markets to see lower levels. But in the meantime, keep your mind open. The short term is impossible to predict. But, we'll see. CPI data comes out in a couple weeks. So until then, we'll see. Maybe some upside in October. If you guys enjoyed this video, smash the like and subscribe. I'll talk to you guys soon.